Alright, now let's take a look at his results again. Let me bring up his results. Okay. Alright, I'll just leave it playing in the background. Okay, firstly, you will notice that some details are blurred or censored. Alright, like these columns here. Alright, I've asked Gambit to do that because I'm about to share a bit more on what this course is about. So I'll be covering the type of strategy that is taught, right, and one criteria for this to work. Okay, this strategy hinges on this one criteria, and that is volume. Volume determines the time you trade, which is the question a lot of you would like to know, right? When is the best time to trade? This is one of the most common questions you get. Okay, more about it later. So I would like to go through Gambit's stats here. Okay, as you can see, he only trades the Euro USD. Okay, under asset, you can see here, all are the same, Euro USD. You can do this at the start. It's always easier to focus on one, right? But for me, I like to look at least 4 charts at the same time. You know, be it the pound USD or the Euro pound or the Aussie dollar. Okay, at least 4 at the same time. So if one doesn't give me enough trading opportunities for that day, at least the others will make up for it. And like I've mentioned before, to have a decent amount of profit, you either have to make many small trades or a few big trades, taking into account the same win-loss ratio. So in this case, Gambit made bigger trades, as you can see here. Okay, under invested amount, $150 for each trade. So he can afford to focus on one and make it worthwhile. Of course, you will need a higher starting capital or balance to do this. I would like to point out one more thing here. He is not using martingale, as you can see. All his invested amount are 150. So this is not martingale. You can rest assured. He sticks to a base amount which can be increased as your account balance grows. But please ensure you stick to good money management system before increasing your trade size, right? Okay, let's see. He has a scorecard of 53 out of 68, achieving a win rate of 77.9% in the month of April. Alright, I've calculated all these stats with 53 winning trades amounting to $14,212.50. That is gross winnings. Okay, profits from the winning trades amount to $6,262.50. Why is there a difference? You have to minus the invested amount, which is the profit for the winning trades. Okay, so this is just over $6,000 US dollars, right? And 15 losing trades amounting to $2,250. So that gives him a net profit of $4,012.50 for the month of April. Now let's look at his March results. He has a scorecard of 52 out of 70, achieving a win rate of 74.29% in March. So more or less around there. Okay, quite consistent. With 52 trades, with 52 winning trades amounting to $14,130, but the profits would be $6,330, and 17 losing trades amounting to $2,550, okay, and 1 trade breaking even, giving him a net profit of $3,780, so slightly lower than April, but still very good, consistent. All this from a trade size of just 150, and it is just from one market, the Euro USD. And you can see from the trade log that he doesn't trade every day. Okay, you can see the numbers here. This is the date. Okay, the numbers do jump It's either the weekend, that's why the markets are not open and that's why there's no trading, or if it's a weekday, probably it's due to his personal, could be his personal schedule, or there were times the market which he was looking at, in this case the Euro USD, wasn't giving him any opportunities. But imagine if he trades on the other markets as well, right? Easily double or even triple. Another thing, it is very good, as you can see. It is quite consistent in terms of percentage and actual profits at the end of the month. Okay, now there are days where you break even, some days you may even lose, but at the end of the month, you shouldn't be too far off. Don't be too bogged down by daily results. Okay, I know it's hard to go to bed that night knowing that you have lost some money, right? But you get used to it. So what is this course? I'd like to share a bit so you guys on the other side can make an informed decision. The course is basically based on the fundamental trading technique of support and resistance. Okay, no fanciful indicators, no robots, no EAs, no softwares, just plain old drawing the S&R lines, okay, or the support and resistance. Now, tell me, those of you who have tried trading S&R before, right? How irritating it is when people tell you it is very easy. Just draw some S&R lines and you're good to go, right? Have you heard that many times before? If you have tried it before, you will know that drawing these lines are very, very subjective, right? Not all of us, not every one of us will draw the same exact S&R line, right? This will result in all of us having different results, all of us having different entry and exit points. So I know this is frustrating. But fret not, in Module 1 of the course, we teach you how to derive some numbers for you to properly plot the S&R exactly to the T, right to the last decimal place. No guessing, no intuition, again, none of that nonsense. In Forex, they are the most common ones you'll notice in most brokers and charting platforms. Okay, they show you prices to the 5th decimal place per point, right, to the 5th decimal point. So no guesswork. Okay, you will know exactly where it is to the 5th decimal point, which level to plot your S&R lines. Now the next thing is when to trade. Remember I was talking about volume. This method hinges around low volume, which means low volatility periods. Okay, this is unique because I have not personally seen a course out there that teaches how to profit from the low volatile times. Everyone else is telling you to trade when there is movement, when there is volume, right? Let us show you how to trade during these low periods. As you can see here, I have marked out in blue, okay, in blue rectangles, Gambit's trading session based on the trade log. Alright, so I've plotted all his trading sessions on this MT4 based on the time he entered all his trades, okay, and you can see it represented here. So remember I was talking about volume. What you can do here, this is my volume indicator. This is the only indicator which is the very basic one. It's just to tell you when is worthy enough for you to check the markets out. So to do this, you go to your toolbar here and you go to volume, okay, under indicators, okay, go down to volume, open up volume and just choose volume and drag it here, okay, and you can choose all these parameters. You can make it big, fat, thin, whatever. Alright, so basically high means high, low means low volume, right? It's quite self-explanatory. Okay, so as you can see here, this is when the Gambit 619 traded during this time here on the 25th of April 2016. You can see that from here to here the volume is low, okay, compared to here, right? This is a low period. Okay, I've plotted everything based on his time. Okay, that's why I asked him to leave out the hour here, so you can see that I've plotted correctly, that I'm not making this up. Okay, it reflects here accordingly. So let's look through a few. Okay, here's another one. Okay, look, very low. Okay, relatively low, low. Can you see his trading, excuse me, his trading sessions are between the volume peaks. All right, here's a peak, here's a peak, here's a peak, and he's trading in between the high volume. How cool is that? All right, everyone's telling you trade here, there's high volume, but we are teaching you how to monetize on the low trading periods when it's quiet. Yeah. Another good thing about trading low volatility periods, they respect S&R lines a lot because there's not enough volume, there's not enough momentum to push through and break the S&R line. That's another key point, another giveaway. Alright, so here another low. Okay, this part I remember. This session is 2 mini sessions broken into half. Okay, it's between here and here. Okay, this spike in volume somewhat destroyed, parted the 2 trading sessions. Okay, here another low volume, low volume, low volume. Okay, I'll just scroll through and you can see that it's in between high volumes. It's in the low volumes, the low valleys of volumes. Okay, here he didn't trade. Okay, low volume, low volume. Alright, you get a picture. Okay, lastly, how long should the trade last? Alright, this one will be covered in the course. Alright, I'll leave it to the course. That's why I got Gambit to censor the expiry time. The expiry time and the order time. But I asked him to leave out the, to at least show the hour here so you know exactly when he's trading. So just now I get to show you all this so you know that I'm not making this up. The only thing I can give away is that we are looking to trade within that window, that few hours, okay, of low volatility. So it's not like you're holding it through the day. Okay, none of our options, none of our contracts last the whole day or more than a few hours. Okay, that's about it. Oh yes, a few more things. Yes, you can see under the instrument, okay, we are only looking to trade the high-low type of options or contracts. Okay, there are many types of contracts. In the course, we will only be trading high-low. But you can trade any of the assets available within the broker that you're using. In this case, he's just trading with Euro USD. The other thing to take note is the expiry type. All right, I do not believe in premature closing or selling back to the broker your option. Closing out early, I do not do that. I'm not a big fan of it, as will be explained in the course. Okay, and the other thing you will notice is that the returns, okay, are different. Okay, you'll be wondering, is the same instrument, is the same asset, why is the returns different? Okay, well, the returns do change from time to time, all right, based on time and based on the asset that you're trading. That means at this particular time, the Euro USD may be giving you a return of 70%, but the Aussie dollar may not give you 70%. But normally the Euro USD will give you higher because there are more people trading it, so you will get around 85 to 80% return on investment return. Okay, and depending on the time you're trading, the time of day, the percentages do change. All right, anything below 70%, we can give it a miss. Okay, guys. So I hope this is inspiring, encouraging, and motivating or motivational. Okay, so to your success, and I wish you all the best. Take care.